Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 4th of January 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of this morning. A much calmer session on the global foreign exchanges after Wednesday's stroke Thursday morning's shenanigans, shall we say. Dollar yen, of course, was the big mover then. The dollar yen rate has regained some composure. The dollar moving back to 108.17 against the Japanese yen, gains of 0.48% for the US dollar against the Japanese currency. Nonetheless, if we look at both the monthly and weekly moves, we can still see that the yen has strengthened considerably, and we're not back to normality, or at least the normality that we saw pre-Christmas by any stretch of imagination yet. There were also gains for some emerging market currencies. The Indian rupee, for example, taking 0.37% off the US dollar yesterday. The Brazilian real gaining by 0.88%, and that brings the weekly gains for the Brazilian real to around 4.22% against the US dollar. So interesting moves there. Dollar index for its part trading at 96.36 shortly before we recorded the video, up by around 0.06% overnight. Okay, what's on the calendar? Events that may move the markets today. Well, we finished the week with a pretty packed calendar, I think it's fair to say. We've already had Caixin Services PMI data out of China for December. More on that a bit later on. To come at 8:15 this morning, we shall have Services PMI data for December out of Spain, and that'll be followed at 8:55 by German unemployment rates and change for the month of December. At 9 o'clock, the first of the big data from Europe today, Market Services PMI and Composite PMI for the Eurozone for the month of December. That's followed at 9:30 by mortgage application approvals from the UK for the month of November, and then the UK's own Services PMI data for December. At 10 AM GMT, we then have the next set of decent European data, CPI data and PPI data for the month of December there. So a look at both producer price and consumer price inflation across the Eurozone. And then we pause until 13:30, crossing over the Atlantic for the December non-farm payrolls, average weekly hours, average hourly earnings, unemployment, labour force participation data, all released then at 13:30. And we'll look at that momentarily. Then at 13:30, often overshadowed by the US data, but equally important, we will have Canadian unemployment data for December. And then we're back in the US at 14:45 for Market Services PMI and Composite PMI readings for the US for the month of December. At 15:15, the first of the day's central banker speeches, and this from FOMC member Bostic. We'll then at the same time hear from the Fed's chair, Jerome Powell, and at 1800, we'll pause for the Baker Hughes US oil rig count, the number of active drilling rigs operating in the USA on a weekly basis. And then at 18:30, the final central banker speech of the day, with the Fed's Jimmy Bullard speaking then to bring proceedings to a close. Okay, breaking news and comment then that's caught my eye overnight. First of all, US equities ended the day sharply lower on the fallout from the Apple profits warning and the much weaker than expected ISM PMI data. The US 500 index was down by some 2.48%. But there was better news from China. The December Caixin Services PMI data came in ahead of forecast at a read of 53.9 versus the 52.9 consensus forecast, and it also tellingly beat November's 53.8 print. So some better news out of China today. The DEC non-farm payrolls are due out today, as we said momentarily ago. Consensus is for 177,000 new jobs in the headline number, but my feeling is that seasonal roles could boost that figure higher. Unemployment is forecast to be at 3.7%, and average weekly hours worked at 34.5 hours. Staying in North America, Canada has said that China has now detained 13 of its citizens since December the 1st, when Canada, arrested Huawei's CFO. Okay, something now in the way of food for thought, something to take away with you into the trading day and beyond. And why not think about this? Does the ADP jobs data that we saw yesterday provide any clues about today's non-farm payrolls? And just to refresh your memory, we saw an acceleration in private sector employment rates in December as far as the ADP jobs data was concerned. You can see we're well ahead of of all that went before it for the last year or so. I think I'm right in saying that this was the biggest gain, I think, of 275,000 new jobs in the private sector, the biggest gain in that figure since February 2017. So one might think that's a bullish indicator. And the other chart we have here is the ADP employment change data in blue against the non-farm payrolls reads, and this from Jan 16 to up to December, which was November's read, of course, for the non-farm payrolls. Now the lines not entirely correlated; they do sometimes move in unison. You can see the sharp rise in the ADP number. We are expecting a gain, obviously, above 155, which was November's employment figure as far as new jobs created in the payrolls. 177, you remember the forecast. I fancy we could see a bigger boost from that, but I'm afraid we'll have to wait to 13:30 to find out the answer to that question. Okay, please do take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're uncertain about those risks or the use and suitability of leverage products for you, then please do contact your Pepperstone account representative, and do take the time, please, to read this risk warning thoroughly. Thank you for your time today.